Good morning, 5/10/2011. Happens to be 5:02 a.m. Pacific Standard Time. What we're really focusing on for the bigger players is the IVV iShares Trust S&P 500 Index. It's another way of looking at what it's doing on a weekly level, so that when we called in February, it's on the homepage, that we were going to have a correction in the S&P. Well, if the S&P 500 index is going to have a correction, then you need to learn how to sell short these 4-week moves down. Now, we've leveraged up and made higher highs because there's a difference between a bull cycle pullback versus a bear pullback. When you're not in a bull cycle, we're in a bull cycle, we're just overbought. So we got at 92.84% on the weekly here. One of the things that we talked about was the 5-day correction last week. It's on the homepage there. Hey, remember, this is live, and I want the hedge fund managers to know that when you're getting the index, you need to be popping this one. So if and when, if we don't break the highs, and we'll let the week play itself out, we'll let this counter trend to the reversal trend. So previous week's reversal, this week's current bull cycle, day number 2 pre-market, actually technically would be day 3 because you had an up move on Friday off the jobs numbers, but that's neither here nor there. We just look at this week, 5-day. Day 2 of 5-day reversal. What we're looking at is that if this comes and stalls, we're looking at shorting this again, just like we did over here. And we had a 2-week pullback in there, and then we've had a 2-week burn. This and bull cycle volatility, price volatility, that's how you put in those higher highs, so that when they do pull back and they stop going, you're popping that long, but just knowing that you're trading a bull volatility price action cycle. So I will say that if we don't break the high and or close above half of the weekly bar and consolidate to move higher, if we fail, if we get ready, then we're going to get net long. But should we fail, you need to be getting the S&P 500 at the strike price on the index puts. You need to start getting with this one. Another one that you can do is the SPY. So there's 4 or 5 different trades, or 7 or 8 trades that can work in a single reversal. Meaning that when you have a 5-day reversal here and you get the right ETFs and the right indexes put together, you can literally get paid. If you want to get paid 3 ways, 5 ways, 7 ways, 10 ways, it's how you cross-reference all of the reversals related. So this is related to the S&P 500 index. Correction was last week. Today's bull rally is to see if they can keep this thing going this week. We'll net long right up to the top and flip it short.